What will you be listening for within those Fed speeches as pertains to yield?
I think you've got to get a sense about whether the Fed really thinks they're going to be continuing on the path that they've set out over the next, say, 12 to 18 months or so. Because obviously what's happened over the last few weeks is that view that we're going to go in December, probably a done deal, but how many hikes are they going to get in next year? They said they're going to do 3, but there's a question around that. And then with some of the economic data globally rolling over a little bit, oil prices coming down, inflation, is going to be impacted by that on the headline level. I mean, it's going to have a big kind of impact on what the Fed looks at over the next few meetings or so.
How do you use the equity market volatility now? Can you correlate in equity markets that we've seen in October into bonds?
You definitely can in the credit markets. We obviously had that big drawdown within stocks, and what it did was it translated through to the high yield markets and through to the corporate markets, and we've seen spreads on those markets widen out to the widest they've been for a couple of years or so now. So yes, at the moment you can. The other thing that's interesting is that maybe that rally in the Treasury market hasn't been as strong as maybe people would have felt following a 10% drawdown on the equity space.
Okay, where do you see value in the markets, Patrick?
I see value in equities in the world outside the United States. I think the United States has come to fair value on earnings, but on EBITDA, book values, price to sales, it's still incredibly expensive. Japan is actually very cheap right now. We haven't started making allocations to Japan yet, but on all our screeners right now, it's shooting out as very good value. On bonds, we like credit a little bit more now than we did. We think inflation is still going to surprise to the upside next year. We think the Fed's going to hike as its plans have been. They're not going to blink. It's equity market volatility, not a real change in the economy in our view.
Patrick, who do you think will disappoint? If you look at Fed and ECB, we're pricing in a kind of pullback of QE. Yeah. We're expecting Fed hikes. Who's going to blink first?
Well, I think the ECB will do what it's going to say. I think it'll be partially offset by adding a new TLTRO program, which will keep its balance sheet not really shrinking significantly. It'll hike in September if we follow a path where there is some growth. The Fed, I think 3 hikes next year. We got the one in December almost for sure now. I think 3 next year, and actually still think 4 is more likely than 2 next year. I think the U.S. economy is still not on an acceleration phase, but a high growth phase.
Do you agree with that, Iain?
I would probably take the other side of that. I would probably take 2 as our base case. We think they go in March and June. And if you think where that gets you to, it gets you to a base rate of around about 3%, which in real terms is going to be about 1%. And that seems a reasonable level for maybe them to take a pause and take stock of the situation and see what's going on the global economy. For them to continue going, and I know the Fed isn't the world's central bank, but for them to continue going, I do feel that you need to see the rest of the world also going with them. So maybe it's a softer Brexit and you get the Bank of England involved, and to your point, maybe you do get the ECB, some of those hikes brought forward, because we're not pricing very much into Europe at the moment.